Want help to grow your business? Download BRiN, the world's first business advisor in your pocket. To find out more, visit BRiN.ai or search the App Store today.
Hello and welcome to Empire Builders. Today we're going to be talking about how to build a business and how to sell a business. Now it may be that you're an employee looking to escape the rat race, or maybe you've already got in business and you're thinking, how can I exit? Or maybe you're right at the end of the path and you're thinking, sick of this business, need to get out, need to make some money. So whatever you're doing, we'll hopefully try and cover it then. Now joining me on the show today is Anthony Bell, CEO of Bell Partners Accountants. Good to see you, Anthony.
Thanks, Chris.
Thanks for having us. Thanks for coming along. So give the viewers a bit of a snapshot about kind of what your business background is, and obviously you run your own business as well.
Yeah, Bell Partners is probably one of the largest boutique advisory firms in Australia. We're up and down the coast and generally work in private clients and their needs to develop their businesses, grow their businesses beyond just doing the usual accounting and the tax products. We're highly engaged in the strategy and the advisory starts that need to partner with our clients' businesses to help them grow and help them prosper.
Now, some of those clients are absolutely massive businesses. Some of them are kind of one-man bands. I mean, you did the Sydney to Hobart quite a few times on your Loyal boat, and again, a lot of those celebrities, they are actually a business, but they're just their own brand, aren't they?
Yeah, they are. And like I said, that's the whole set about using a brand, whether it's in a business or whether it's in an individual person, and extrapolating the most amount of worth out of that is part of the process. So when I look at some of those guys and I look at some of the corporates, the larger corporates, they actually do play by the same rules.
Now, a lot of people, that when they're kind of setting up the business and it's all about the website, what's my name and all the rest of it, should you actually start with the start of the business or actually look at the exit to say, well, if I'm in this business to make money, maybe what is my exit plan?
Yeah, it's a great statement I've made for years now. As I say, you must look at the end at the start, and then we must build towards something. If you want to sell your business for 20 or 30 or 40 million dollars, whatever the range of proactive growth you can achieve, then it's got to start somewhere, and you have to build slowly and surely, week by week and piece by piece to actually get to that. So I think it's really important not to just have a drifting business that's just continuing on in an occupation type set, but to actually have some clearly defined goals. And then the part once those goals are defined is working out, right, how do we get there in the most efficient and cost-free method possibly, and with the least amount of stress and strain, of course.
And I guess for a lot of people, they've seen a lot of these TV shows where they you have all these venture capitalists coming in and seeing these businesses, and look, some of them are just a hobby. They say, look, it's a great business, not going to go anywhere, and it's kind of knowing it at the start. Other people, they say, well, it's actually worse than having a job, because now you're not definitely getting paid every month, you're working twice as many hours. And there's other people that they're just so disciplined and that's what they want to get. And
it's a difference, Chris, between having a vocation and having an occupation. An occupation is just something that you just go to every day. It fills the hours and you go home. But a vocation is really something that your career struck for, you're permeating towards really high achievement, taking on a little bit of risk, of course, which comes with that one, but then somehow aiming to yield on the distinctive benefits that come from great calculation and great strategy.
So a lot of business owners do go back to being an employee because they think, look, I don't have to worry about it overnight. So I guess if you're going to start a business, you really probably need to earn double or triple your salary, otherwise it's just not worth that pain.
Absolutely. I mean, I start with that and saying that if you're only going to make the same amount of money as you would by being employed by somebody else, stay working for somebody else. You haven't got to do the capital injection, you haven't got to worry about cash flow, you haven't got to worry about the ups and downs of being in business life. It's not worth the strain or the risk to just come out of it without that risk return factor we mentioned to actually do well in the business.
Now, what are the typical exit plans that a business can go through?
Look, there's a few, Chris. One is just a straight out trade sale, and taking business and offering it to the market, offering it for how it is, and you're hoping to sell it to somebody else who's already in the same industry or in the same trade, and they will naturally think that they're buying something of value. And they're naturally thinking too that they can do something with it that will improve on what the original founders have taken it to. The other items is to break the business down and to sell it back to the employees and do an employee share plan. And that's another great method. We do a lot of work with that one and helps bring partners, helps bring longevity in. But then, when the business really starts to take shape, the possibilities of a management buyout by a larger company who just likes what you do and they're happy to buy out the management and buy out the equity of it and have those people continue on. Or even one other method, of course, is a full IPO and taking it to the public and let the public become shareholders in your business as well. I'd usually say that's at the larger scale of town at the IPO, but there's certainly great methods of exit. And if we have a business that's going to be wanted by the employees and the owners, there's a very good chance it's probably going to be wanted by somebody else as well.
And so how does someone actually go valuing a business? Because I guess it's like your own property. You always think your house is the best one in the street, and I assume the same thing goes for the business.
Yeah, I mean, the first place that we counsel all of our business owners, our private clients on, is saying it must generate healthy profits. That is really what a buyer is looking for. They want to buy those profits and the rights for those into the future. But then on top of that, it's got to also have not just paper profits, it's got to have good cash flows to actually support the investment return that a buyer might want. And then most importantly, when the buyer is coming, say, can the business operate independently of its owners? And that's the real question. Are the owners redundant? If they take off, they take their check and they go on a long holiday, what will happen to the business without them? So I always say this to the owners, that you must try and make yourself redundant leading towards the business sale, so the buyer is not thinking that there's a lot of, say, CEOism or founder-ism to actually mean that once those people aren't there, the business may actually detract and what they paid for may not be realised. So we need to have awesome businesses of longevity and awesome businesses of innovation.
Because a lot of entrepreneurs or business owners would be pretty anal, and quite often they built the business up from themselves and got other people in, and it's all about them. And they think that's a great thing because they've got this big name and their name's on the front door. But actually, as you say, it could be the worst thing for the business. Yeah,
a bit of founder syndrome, sort of exists in most private clients that we act for. But, so the more entrepreneurial and the elements there, whether they're setting something up for sale, they don't let the business bog down, with the founder's name too much, or with its heritage too much, or with the fact that there only can be one person to run the show, and the mere fact that somebody else might come in could actually run it better is probably the answer as well.
So could you get the opposite, that a business is actually worth zero?
Yes, you can, and this is usually what takes place when the business isn't performing very well at all, that for whatever reason it's lost its way. It may have performed well a few years ago, but in that element as well, it may also to be considered that the brand is worth something. The brand has some sort of patent value that the market will pay for, just for the rights of what was impressed on the market, so they don't have to remarket a new business. So yes, you can get to the point where the business is worth zero. Sometimes, unfortunately, you can get to the point where the business is worth actually less than zero, and that's where the business has been trading insolvently and should have been shut down before it got to that point.
Yeah. And I guess for a lot of our viewers, they're kind of pro-property, and we've talked before on the show about building a real estate business. Again, a lot of real estate sales businesses, they might turn over millions and millions of dollars, but technically there's not really any value because there's no recurring income in there.
Yeah, I think that's the biggest issue there to face too. The amount of people that will still say those statements that my company is very rich, but I am very poor, meaning that they can't extract the value of the company out because they're constantly re-injecting profits into the parts of the business that aren't efficient. So when I come back to those sort of type businesses, particularly in property, I always say as well, is what a great opportunity if you have 10 or 20 or 30 staff and you're paying rent to a landlord. Why wouldn't you just go and buy even the commercial property that you're working in, pay interest to the bank rather than rent to the landlord, and then have a piece of the capital growth of that? By the way, too, the first check you write at the end of every month is usually to yourself.
And also a lot of these businesses then get into side businesses, just like buying their own real estate, to then generate more of something that can be sold. So like property management for one, quite often the reputation is it doesn't necessarily give you much money day to day, but that's the thing you can sell many years later.
Yeah, rent rolls, if you're a real estate specialist, is you've got a res sales business which has a lot of personal goodwill attached to it. It has a lot of goodwill of the listing agent. The rent roll is usually the nest egg of most real estate property owners. They say that that's got a value. They have values in two ways. They can sell it to the open market. The other value, of course, is it provides future listings for that base. When the owners of the properties that you're managing decide it's time to sell, they'll usually go back to the agent who's managing it to give them the first shot at the listing as well.
But it's funny because property management isn't the sexy side of the business. So again, I guess people need the discipline of, are you there to make money, or are you there to have a sexy, trendy business? Because the sales, they're the ones that have all the fun and do all the fancy showings. The property management, they're dealing with whinging tenants and whinging landlords, but they're the one that actually make the money.
Well, and it's safety on that property management side, because it is usually very cash flow strong. You get paid on a monthly basis, unlike, sort of the ups and downs of residential sales. So there are some elements that are run quite successfully. There's public companies that have emerged who don't do anything else except property management. So there must be a lesson to be learnt there somewhere.
So similar to a lot of property investing strategy, quite often the expert's actually contrarian. So rather than looking at starting your business and looking at the start, you may...
To continue enjoying this presentation, download BRiN, the world's first business advisor in your pocket. To find out more, visit BRiN.ai or search the App Store today.